Most people think Ethereum is quiet right now. They look at the price sitting under $3,000 and they assume nothing is happening. They assume the market is bored. They assume the trade is dead. That assumption is going to cost people more than any bad entry ever could, because silence in this market doesn't mean inactivity. It means accumulation. And right now, Ethereum is being accumulated in a way we have not seen since the earliest institutional positioning phases. The screen is lying to you again. And just like every other time in history, the people who rely on the ticker instead of the structure are going to be the last ones to understand what actually happened. Ethereum is not struggling. Ethereum is coiling. Let's define the situation clearly. The first thing you need to understand is the trend line. Ethereum has held an ascending trend line that dates back to May, connecting higher lows across June, November, and December. That is not accidental. Markets do not respect lines unless capital is defending them. Someone is buying every dip, not emotionally, not impulsively, systematically. Now look at the indicators people ignore when price doesn't move. MACD is creeping back toward the zero line. RSI is rising out of neutral territory. This is not a blow-off. This is compression. This is energy being stored, not released. And markets do not store energy indefinitely, they resolve it. Here's where things get uncomfortable for people who only think in short time frames. While price goes nowhere, supply is disappearing. And not from weak hands, from the strongest hands in the market. BitMine has been accumulating Ethereum aggressively over the past 30 days. Not trading it, not flipping it, accumulating it. The company now claims the largest ETH treasury in the industry. That alone should stop you in your tracks. Companies do not allocate capital at scale into assets they expect to underperform. They especially don't do it when price action looks boring. They do it when liquidity is available and conviction is highest. And BitMine is not alone. Long-term holder addresses are increasing their share of total supply. Coins are moving off exchanges. Liquid ETH is shrinking. This is the part of the cycle nobody notices until it's over. When supply is removed quietly, price doesn't respond immediately. It responds later, violently, when demand has nowhere left to go. At the same time, something subtle but critical has changed. Spot ETH ETFs have flipped from net outflows to net inflows. This matters far more than people realize. ETF flows are not emotional money. They are not chasing candles. They are positioning capital. When ETF flows flip positive during price stagnation, it means institutions are buying weakness, not strength. Let me say that again, because this is where people misread the market. Institutions are not waiting for $3,500 to buy Ethereum. They are buying now when sentiment is muted and volatility is low. This is how they always operate. They let retail exhaust itself emotionally, then they step in. Now let's talk about why $4,000 matters. Not as a number, but as a signal. $4,000 is not just resistance, it is the psychological confirmation level. It is the point where Ethereum stops being disappointing and starts being undeniable. Once ETH clears that level with structure intact, the narrative shifts instantly. The same people calling it stagnant will call it unstoppable. That's how reflexive markets work. But here's the part that separates this move from past cycles. Ethereum is not just a speculative asset anymore, it is infrastructure. And infrastructure does not trade like memes. Developers are building at a record pace. 8.7 million smart contracts deployed in a single quarter. That number is not hype. That number is usage. You cannot fake that level of activity. Contract deployments collapsed in 2024 and early 2025. Many people declared Ethereum dead. They were wrong. What they were seeing was a reset, not a decline. The current spike is not a bounce, it is a reversal. Roll-ups, layer 2s, stablecoins, real-world assets, wallet infrastructure, all expanding simultaneously. This is not one narrative. This is an ecosystem coming back online. And here's the most dangerous misunderstanding in the market right now. People think lower fees are bearish. They think if Ethereum isn't congested, demand must be weak. That logic is obsolete. Fees are lower because the network works better. Pectra and Fusaka upgrades increased gas limits, improved validator efficiency, and allowed Ethereum to scale without choking itself. This is what maturity looks like. Ethereum recently processed over 2.2 million transactions in a single day at an average fee of 17. Let that sink in. In 2022, that same activity would have cost users hundreds of dollars per transaction. Ethereum didn't lose demand. It eliminated friction. Now ask yourself a simple question. What happens when demand rises again, but supply is already locked up? Because here's the real story nobody on social media is explaining properly. Ethereum's supply dynamics are tightening while usage is accelerating. That combination has only one historical outcome. Long-term holders are not selling. Coindays destroyed barely moved throughout December. Experienced investors are sitting on their positions even as price fails to break $3,000. That tells you everything you need to know about conviction. People who have seen multiple cycles are not panicking. They are waiting. Waiting for what? Waiting for the breakout that forces repricing across the entire market. Now let's address the risk, because pretending risk doesn't exist is how narratives collapse. This is not 2018. This is not a market running on leverage and retail mania. This is a market where institutions, treasuries, and long-term holders are the marginal players. And that brings us to the most important point of all. Ethereum is not moving because it doesn't need to yet. The market is letting supply drain first. The market is letting weak hands exit emotionally. The market is letting capital reposition quietly. When Ethereum finally moves, it will not ask permission. The breakout will not be slow. It will not be polite. It will not give you time to adjust your bias. Once ETH clears $3,000 decisively, the path to 3,130 wire opens quickly. And once that level flips to support, the $4,000 target stops being speculative. It becomes structural. This is how repricing works. Not through excitement, but through inevitability. The people waiting for confirmation will get it at a higher price. The people waiting for dips may never see the ones they want. And the people calling Ethereum boring right now are making the same mistake people always make at this stage of the cycle. They confuse silence with weakness. Ethereum is not weak. Ethereum is preparing. And when preparation turns into movement, the market will remember very quickly why this asset refuses to disappear. This is not about hype. This is not about narratives. This is about structure, supply, and conviction. The bulls are not loud. They are loaded.